Americans do many things with their money and invested assets. Most of them are, of course, in the up and up. However, there are some exceptions where people have unintentionally bent or broken the law. Hi there, my name is Kenneth French. I'm with Vast Solutions Group. We are the premier tax and financial engineering firm for small business owners. We have clients all over the United States, from north, south, east to west, and of course, most of them are doing the right thing. Otherwise, we wouldn't be working with them. We do have some instances where people have unintentionally broken the law. And what follows really is, well, some explanations not only of those instances, but some other instances we've heard about. So you don't do some of these same things. Well, here we go. You might laugh at some of these, by the way. There's some cavalier ones and some kind of ridiculous ones. But, signing a check that is not your own. Have you ever wondered, quote, if a relative is no longer able to sign their checks? Well, may I sign for them? Well, the safe answer is yes, but if you have been granted what's called a power of attorney or POA for your relative, the POA gives you the legal ability to handle any financial transactions or matters on their behalf, including writing checks, as a matter of fact. Now, however, depending on the state in which you reside, you may be permitted to sign on behalf of another person as long as you follow some very, very specific rules. First, you need to have written permission from the person on whose behalf you wish to sign. Second, make sure to clearly write PP before the person's signature. This abbreviated form in Latin, per cruciatum, roughly translate by proxy, and indicates you have permission to sign on their behalf. Overestimating non-cash donations to charity or a nonprofit. Imagine that. Someone donates a van to a food bank, let's say. In the donor's mind, the van is worth the original purchase price, $6,500. Unfortunately, the fair market value of the van turns out to be substantially less due to, something called depreciation. However, the donor reports the value to the IRS, that being at $6,500. If the IRS disagrees, and it very well probably will, assuming decent documentation is available, etc., the donor might be in for a tax penalty. It's important to remember that this information should not be construed as tax, by the way, or legal advice, and may not be relied on for purposes of avoiding any federal tax penalty. Now, also, forgetting to report 100% of income. Some people intentionally misstate their incomes to the IRS, and others neglect to report miscellaneous forms of income like royalty or freelancer payments, dividends, prizes, and so on. A penalty may just be awaiting them. The chance of forgetting the odd W-2 or 1099 form rises when taxpayer moves during a year, works several jobs. Tips must also be taken into account, by the way, when filing a federal tax return. The IRS provides a Form 4137 to help individuals determine any additional Social Security and Medicare taxes that they may owe as a result of tips and wages not reported on an individual's W-2 statement. Forgetting estimated tax payments. If an individual freelance does that in a significant amount, they might expect about $1,000 from such activity, then estimated tax payments must be made quarterly to the IRS. Now, penalties may be triggered if quarterly deadlines are ignored. Deduction too much of business-linked expenses. This can also invite IRS penalty, and business owners, executives, entrepreneurs can fall prey to this common tendency, by the way. The IRS finds that less than 7% of such deductions are intentionally overstated or made up. Not good. Ruining money, making U.S. paper currency, or making it unusable is a fine. You can't deface money, can't use glue, can't do anything of the sort. If they're no longer in commerce, and it's because of you, it's a violation of federal law. Now, if you're guilty of it, this sounds funny, if you're guilty of it's negligent behavior, it sure beats being guilty of fraud. The standard U.S. penalty for reporting a mistake on your 1040, by the way, is 20% of unreported amount. Contrast that with 75% of civil penalty for tax fraud. Of course, negligence can be viewed as fraud, and that alone should make people think twice about inaccurately stating details of their personal finances. These are things you might laugh about them, but they are significant. Now, if you're interested in learning a little bit more about these or any other tactic, how to work legally within the bounds of our authoritative government, that being with the IRS as an example, Department of Labor, please look us up on the web at www.vastsolutionsgroup.com, or you can give us a call at 888-808-8278. And once again, my name is Kenner French. Again, I'm with Vast Solutions Group, the tax and financial engineering firm for small business owners. We principally work with business owners who are paying the right amount in taxes, not overpaying their taxes, but paying the right amount. That's what our goal is, to make sure people aren't overpaying their taxes, at the same time making sure they're not doing anything illegal, because that's outside the bounds of our professional expertise in needing and working with people who should be paying the right amount and not cheating those who are paying the correct amount. Once again, Kenner French, it's been a pleasure.